an opportunity to do what's right, to change business as usual, to become business as it should be, where people don't just live and work, they thrive. To do that, Colliers is committing to elevate the way we do business, to elevate the built environment. We will minimize environmental impacts in our own operations and through the services we provide our clients. We will increase diversity and inclusion in Colliers and across our procurement practices to create an atmosphere welcoming of diverse ideas and perspectives. We will promote health and well-being in our operations and through our client services to help improve lives. Together, we will elevate the built environment and build better for our collective future. For ourselves, for our clients, for our communities, for the world.
The Wallace Business Forum is a 30-year-old think tank that provides a valuable link between the country's top business leaders and the leaders of government. It helps CEOs to understand the environment within which they must operate through a series of publications and meetings that access the business, political and economic environment and predict where we may go. WBF is considered one of the most authoritative, independent sources of information and assistance in understanding in the Philippines. We tell it like it is.
Several leaders of economies today reminded APEC leaders to focus on economic synergy and cooperation on this year's APEC.
Welcome to Boracay, the Philippines' most famous beach.
We have covered the journey of our young democracy. In ANC, we were witnesses to the defining moments of Philippine history that influenced the world.
To the service of the nation.
We talk to leaders. We don't shy away from difficult conversations.
ANC Leadership Series.
We don't just tell stories. We tell you why they matter. We sift through the noise and arm you with facts.
We report about disruption and how the latest technology and innovation have changed the way we live.
We told stories about crisis, but also about opportunities that came with them.
This is the Philippines.
And we are ANC.
Morning, everyone, and welcome again to Colliers Philippines Property Market Briefing. We're very excited to share with you our latest data on the Philippine real estate market, which our research and office services teams have put together. I'm sure we're all going to get plenty of insights that will help us make better and informed business decisions over the coming months. We have a great program for you today, so I hope you will stay with us until the end. But first, let us acknowledge our partners who made this webinar possible. British Chamber of Commerce of the Philippines, Australian-New Zealand Chamber of Commerce Philippines, ULI Philippines, the Wallace Business Forum, Canadian Chamber of Commerce of the Philippines, the ABS-CBN News Channel, and the Philippine Daily Inquirer through Inquirer Property. I am Maricris Sarino-Joson, Colliers Director for Office Services. I will be your host and moderator for this webinar. But before we officially begin, just a few reminders for our viewers. I know most of you are used to attending webinars, so this will be very quick. We will have an open forum after the main presentations, and should you wish to ask our speakers and panelists, you may send your questions through the chat box. If for any reason we are unable to answer all the questions sent, we will ensure to reach out to you via email after this webinar. For this briefing, our research and office services teams have prepared reports for the office, residential, and retail sectors. You may download copies of the reports via the link we will send to this webinar chat box. If you're unable to see it, do not worry. We'll be resending the link in the chat box throughout the webinar. If you're unable to download the reports today, please do not worry, as we will send them directly to all those who registered for this event. And you will be able to access these reports through our website and social media pages. So make sure you're following us on Facebook, LinkedIn, Twitter, and Instagram. So with that, let's begin our webinar. In our briefing today, experts from Colliers will discuss the performance of the different sectors of the Philippine property industry during the third quarter of 2021. Our experts have meticulously organized data from July to September of this year. This data will mean more with our experts' insights and recommendations to help us make better and informed business decisions and respond to these changing times. When we had our last market briefing, the government just announced another round of ECQ, or enhanced community quarantine, to curb the spread of the Delta variant. Since then, we've witnessed COVID-19 cases frighteningly soar to as high as 26,000 in early September. But major strides in terms of vaccination have also been accomplished. More than 56 million of the COVID-19 vaccines have already been administered, with more than 26 million eligible individuals are considered fully vaccinated. The government has also been administering close to 500,000 doses each day over the last week, and about 85% of Metro Manila's eligible population has been vaccinated. At present, fewer than 5,000 cases are being reported daily, just 23% of the peak reported in September. We've also seen quarantine restriction ease. Restaurants now allow dine-in guests. Personal care services and gyms are now open with limited capacity. Interzonal travel is now more relaxed, and in November, cinemas will open and Boracay will accept fully vaccinated visitors, even without the negative RT-PCR test results. The country's GDP also grew to 11.8% in the second quarter of 2021, putting our annual growth forecast at between 4 to 5% this year. OFW remittances for the first 8 months of 2021 are also now 5.7% higher than in the same period in 2020. So how would this recent turn of events impact the real estate market? What do these gradual improvements mean for the sector? Are we finally putting the pandemic behind us? We hope to answer these and more in this webinar. Thank you, Joey. Very, very informative presentation. Thank you. Thank you, Dom and Joey. Your presentations were indeed very informative, and I'm sure our viewers have a lot to take away from them, especially your recommendations on how they can seize opportunities amid the current challenges. So right now I'm seeing a lot of questions in our chat box, and I'm sure our speakers are excited to answer these. But before that, let me introduce first our panel. First is Colliers Managing Director, Richard Raymundo. Morning, Rich.
Hi, morning.
Director for Advisory Services, Teodoro. Hi, Tem.
Hello, good morning.
Director for Capital Markets and Investment Services, Paul Chua.
Morning.
Morning, Paul. And Director for Valuation Services, Paul Vincent Ramirez. Hi, Paul.
Good morning.
Morning. Okay, so Paul, since you were in a long vacation, not just kidding. Beyond 2021, Please identify factors that will affect land values within and outside Metro Manila.
Yeah, okay, that's a very tough question, but I think it will all boil down to how the government will ease all these restrictions. As we've seen, so I think the announcement of the DOT secretary that the easing of the requirements for RT-PCR tests and all those tests, if you're fully vaccinated, it's a welcome sight and a welcome news for us, especially those in the leisure sector. And I think moving forward, it will be how the school will open in 2022. All of these have other real estate support, a market that requires the children to be in school, like the dorms, like the retail shops, etc. So, and lastly, it's still the government and the infrastructure. How the government will roll out its infrastructure, that's where the values will be.
In relation to the infrastructure, what transport infrastructure is going to accompany the continual buildup of developments in the other CBDs, Paul? Do you think that will really help increase property values? This is from
I think it's all infrastructure projects. So I think the current administration's a thrust for more projects, more infra projects to their build can reap benefits. So we've seen that in Calax, we've seen that in all of this infrastructure, that land values around these proposed projects we've shown increases already in this area, and that will continue to increase once this project is completed.
Thanks, Paul. Joey from Rizal Reyes of Business Mirror newspaper, do you see a slowdown in property investment and development coming to the election season?
Okay, let me start by saying that we are apolitical, but at Colliers, we always say that the development pipeline or development plans of property firms will really hinge on the policy of the next administration. And I always get this question on, how will the election season or its results will influence the property market. But whoever wins in 2022, we believe that it is important that that candidate continues projects, programs that will positively influence the property market. And this includes the Build program, the infrastructure program of the government, the decentralization thrust, meaning more economic opportunities outside of Metro Manila and spreading in cities or areas like Pampanga, Cebu, Bulacan, which, as I highlighted earlier, is something, a province that we should all watch out for. Taxation will also be an issue. And of course, the continued implementation of COVID-19 vaccination, which we believe will have a positive impact on all property segments, whether it's office, retail, condominium, industrial, or leisure, especially, which is one of the most affected property sectors.
Thanks, Joey. Paul, since we see a lot of growth in the industrial sector, please identify areas that remain attractive for industrial land and warehouse acquisition.
For most locators, ideally their preferred locations are those that are very close to major roads, infrastructure, obviously ports and airports. So that being said, it's still the Calamba, Batangas, Cavite, Laguna area that are driving the demand for industrial spaces and warehouses. But of course, everyone is aware of the North Rail development. So meaning movements towards the north, like Pampanga, Bulacan, all the way to Tarlac, will definitely see an uptick in demand in the next couple of years, particularly near the airports in Bulacan.
Paul, how about Vismin areas? Is there any indication of market expansions in these areas? Like for Gala, I think he was asking specifically in Tacloban. Any opportunities in the Vismin for growth in the sector?
Yeah, well, for most industrial or warehouses, it's essentially located in hubs. So Cebu and Davao would be a good location. Tacloban, for some reason, we've seen demand for spaces, particularly maybe in the BPO sector. There are a very few industrial demand there at the moment. But well, if once we see any improvement, particularly in infrastructure leading to Tacloban, then we would see improvement in that sector as well.
Thanks, Paul. So for Dom, a lot of exciting opportunities, I think, for our office market. See a lot of supply happening, a lot of growth coming in again because of the US economy. But one question really is, do you see companies implementing work from home beyond 2021, and how will this affect office take-up, Dom?
Yes, I think that's something that we need to accept. Work from home worked, and that's going to evolve into something else that's going to be hybrid work model. So definitely it will put a dent in terms of the office space demand. We need to accept that. So, but we don't see that to be the majority. So I don't think it will be 50%. I think the number that I hear from the people I talk to is going to be anywhere between 10 to 30%. And it still remains to be seen how the companies will adapt to this. I mean, many of them would want to implement. They're studying right now how the work schedules will be, who will be put on a hybrid work model, what's going to be the impact in terms of their operations, what's going to be the impact in terms of their office space usage. But all of these things there's no proof of concept yet, right? So in terms of what they're trying to do right now. So let's see how this evolves moving forward. And there's the number that I'm seeing is anywhere between 10 to 30%.
10 to 30% work from home split, on-site and work from home. From Chris?
Hybrid, not necessarily work from home. It's going to be hybrid.
From Chris Raymundo of Philippine News Agency, will PEZA registered spaces in Metro Manila be able to cater to the new demand? Since we expect BPO expansions as US economy improves, how will this affect the expansion of BPOs in the country, since most of the BPOs, especially new ones, will choose to locate in NCR than putting their first office in the Philippines outside NCR? Any thoughts on this, Dom?
Yes. So the volume of available PEZA spaces would help the BPO expansion, particularly in Metro Manila. And in terms of say Metro Manila versus, it's not Metro Manila versus provinces. It's Metro Manila and the provinces. So there's going to be a segmentation in terms of the work that they'll conduct in Metro Manila and the work that will be conducted in the provinces. So that's how it's the same as what the India. So it's not the India versus the Philippines. It's India and the Philippines. So that's similar with us, like Metro Manila and provincial areas.
Agree with you on that, Dom. So you also shared how landlords can really differentiate themselves during this time. So a question from Julius Solis: most of the big projects from several property developers will be completed by 2022. Would there be a big reduction in lease rates due to oversupply?
It follows, no? So I said earlier that it looks like we're on the way to the bottom already. So that's probably in some form or magnitude that's going to continue in the next year, depending on the standing of, say, the landlords, the developers. So that's going to continue. We just need to ride that bottoming out, and there's no way but up eventually, because we're very optimistic that our economy, the fundamentals, the people are available, the talent, we will rebound soon.
Pocholo Niebres, Dom, further to hub and spoke, are you seeing any trends of bundled leases for multiple locations, either from developers or for special concessions given to brokerage firms such as us?
Yes, of course. It's a scale. Of course, has the advantage, right, in terms of the buying power. So definitely, if there's so our advice specific to some of the clients that we have is that they need to look at leases that are expiring in the next 12 to 18 months now. Right? They need to understand in relation to the implementation of the hybrid work model, the study has to be started now, so that they'll be able to maximize the opportunities that are available also in the coming months. And one of which is, yes, bundling of transactions to be able to generate more savings for the companies.
Thanks, Dom. So let's move on to the residential question. So for Tim, please discuss pre-selling condominium trends in Metro Manila. Is demand shifting from CBDs to CBD areas, Tim?
In Metro Manila, we did see that the fringe areas were quite active, such as Quezon City, C5 and Alabang, in the mid-income segment. And then for outside Metro Manila, Batangas, Cavite, Laguna continues to have good performance, and also Pampanga. For house and lots, it's usually economic, affordable, and then some mid-income. And then for luxury, for lots, it's the luxury segment and a little bit of the upscale.
So Tim, cost of construction materials rapidly increase. How would this affect the supply and demand of the real estate industry, especially in residential? From Theresa, Surina.
It will affect how developments will will price their development, especially since there are margins that have to maintain. And if it's more difficult for them to come in, construction periods will be lengthened. That's why we do see in the market some trends where they offer really extended payment terms. This takes into consideration those challenges in the construction side.
Tim, from GeoCell Olande, what are secondary cities in the provinces that there are prospects or opportunities in? Secondary cities in the provinces.
Well, for Laguna, of course, Santa Rosa, for residential is quite strong, but and the infrastructure developments, especially Calax, cities where infrastructure developments will have exits in, will have very good prospects. General Trias is also interesting, and also, of course, the ones in Pampanga and in Bulacan, near the airport area.
So you mentioned Clark, Pampanga. From Arabel Solidum, would you have any data or reports on horizontal housing developments in the regional growth areas such as Clark, Pampanga?
Well, in Pampanga in general, we saw the take-up for third quarter to be almost close to the last year's performance, and then we also saw in terms of segments, the affordable segments to be doing well in that area as well. Pampanga is also quite interesting in terms of condominium developments. There's been new developments that's been launched there, and we'll see how that one does in the market.
There are more questions on residential from Daniel Balo Alo in NCR. Is NCR pre-selling condominium sector this Q3? Or is it resilient in terms of take-up and selling price?
In terms of selling price, yes. So far, we didn't really see any decreases in terms of the selling prices of developments. They do offer time-based promotions and discounts, but the overall selling price has been maintained in Metro Manila with some slight increases in certain areas. In terms of take-up for this period, though, we did see it's not as good as previous years. We saw that in the slide previously, but that's also partially because we did have another lockdown in this area, and this also affected sales, especially in the investor market as well. But moving forward, the residential market in the NCR is still going to recover because vaccinations are already being implemented. the economy is opening up, and hopefully this will remain stable. And so in terms of the investment market, this will eventually translate to improving yields for them in the future. So it's actually good if they take advantage of the promotions that's being offered in the market right now. In terms of the end users, residential is still a basic need. It's always going to be there. And it's still going to be attractive to be located within NCR. There might be some wait and see attitude from the buyers for the remainder of this year, no? But we see this eventually moving, recovering, especially since, as Dom mentioned earlier, work from home setup is going to be continuing practice of the office industry, and so people will really be investing in their residential spaces moving forward.
Let's go to high-end properties. What are end users looking into or major considerations in buying high-end or premium units?
Well, there's two different kinds. No? There's the ones that wants the horizontal, and then there's the ones that are still interested to be located within CBDs. So those that are interested in going horizontal, they're really looking for, because especially of the lockdown and the experience of being cooped up in the house for extended periods, they're really looking for open spaces with really good amenities that allows them to enjoy a more sporty or wellness oriented type of development, but still looking for key amenities to be, facilities and amenities to be there. The retail has to be there. The institutional has to still be there, especially for their kids. No, for the CBD, for the luxury, it's still going to be very much location based. They're still going to be looking at key CBDs, or at least mga fringe areas for those CBDs as a prime location. They're gonna look at the level of amenities that they have, the finishings that they provide, the type of product, and also the payment terms. No, the luxury market is also quite, of course, they're quite smart with their money, right? So they still look at how these payment terms appeal to their finances. They know how to play with their money, and so the payment terms are also quite important to them. Of course, wellness and infrastructure has to be there.
Definitely the open spaces where kids can run around and everyone outdoor exercise. How about Vismin opportunities, them for residents?
Vismin, actually we saw Davao also related to what Dom mentioned earlier, picking up. So right now they are all in the first half of the year alone. No, they already hit last year's sales. So looks like this year will be better for them compared to last year. In Cebu, it's slow for some segments, but I think luxury and affordable is doing well in Cebu.
Thanks, Tim. Sir Hector is here, Hector Conan. So Paul, for you, there commercial properties or vacant lots for sale in the Clark area? This is from Sir Hector.
There are mostly for sale in the fringes. Inside Clark, it's really for lease at the moment. In Tarlac, I think there are a couple of lots available. So yeah, we can talk to each other.
Yes, Sir Hector, we'll call you after this. So for Joey, we'll go to retail now. Are we starting to see recovery in consumer traffic? Will this last beyond Q4 2021, Joey?
We're still optimistic that it will improve, especially towards the latter part of 2021. Note that in 2020, consumer traffic in malls was down 50-60% compared to pre-pandemic level. And some retailers also reporting that the luxury segment is starting to recover because, as I mentioned earlier, the A and B market was the first segment of the population that was inoculated against COVID-19. So OFW remittances are holding firm And again, the fourth quarter is traditionally a strong period for consumer spending, mainly because of holiday bonuses or pay of employees, and supported by the improvement in remittances or money sent in by Filipinos working abroad. So I think one thing to watch out for in retail is the inflation rate, which we are starting to see inching up. And again, for mall operators, the rising propensity of Filipinos to shop online. I know, Chris, you're fond of shopping online, but let's see how that will affect the the general condition or the the mindset of a Filipino shopper. Are they still willing to visit a physical mall, or will they just shop from the comforts of their home and therefore affect the absorption of a physical retail space in Metro Manila?
Richard, which retail segments are likely to stoke the sector's recovery and why? Rich?
Well, Joey mentioned it, no? I think if you look at the retailers right now, high-end retail, luxury is starting to post year-on-year sales. So look at SSI, for instance. It's the luxury segment that is starting to post year-on-year increase in sales. It's interesting that Greenbelt 3, Joey mentioned this, has just opened, and they're very bullish. It's the biggest Louis Vuitton that we have in the country. You're going to have Fendi, you're going to have Rimowa, you're going to have all the big brands of LVMH. And they're very bullish about that sector. So that is interesting. Another sector that Joey mentioned, food and beverage. So Joey, you had that slide a while ago on that revenge dining and revenge shopping. We've already seen that in more advanced countries. First world countries have all gone back to pre-pandemic sales for their retail. So watch out for that. Watch out for F&B, revenge dining, and then the revenge shopping. I think those are the things that Joey pointed out, and I totally agree with that.
So Rich, a lot of questions from our mall operators. What are your recommendations for mall operators?
Be ready for the upturn. All of the different sectors that we mentioned this morning, while we're still seeing some weakness, like office, there's still weakness in the vacancy, in residential, there's still some weakness in the take-up, but we are going to get to that inflection point. We are gonna get back to the bottom. As Dom mentioned, we're gonna see the bottom soon. And once you see that bottom, you better get ready. And I think for retail, you need to be ready with your inventory. You don't want to be stuck with, when the market is starting to go up, there's holiday spending starting this quarter, and you don't have inventory. So think about that. In terms of a retailer, think about the experience. When people start going back to the mall, when they start dining, when they start eating again, and when they start going back to the mall to buy stuff, how is that experience? Will you be do they feel safe? Part of the poll that Joey did this morning was, why is it that people still don't want to go to the mall? They said, we still don't feel safe. And a lot of people say, we still can't bring our kids. But when that time happens, when you can bring your kids and your family, you need to be ready. You need to be ready to serve the people and give them that experience. And a lot of the retailers are doing that. So be ready with that. Be ready with the experience, and then be ready with the new normal on the safety and the sanitation and the hygiene.
Thank you, Rich. So a lot of recommendations there, especially this Christmas season. So we expect bounce back this November, December. We already received our first Christmas gift 3 days ago.
Fantastic.
We see people shopping already. So Paul, back to you again. A lot of questions on really opportunities and land value. So from Christine Guades, will prices of raw lots in NCR to be used for residential development go down because of the effect of the pandemic? Paul?
Yeah, on the short term, we do see it, given that all the fundamentals of a condo project is trending downwards or still down, like take up, like prices. So those development, those land which is ripe for residential condo will have to, wait a bit, wait it out and develop it maybe a year from now. So you unlike before, if you have a prime land in Metro Manila, you can readily develop it and assured of a market that's willing, able, and love to have a place, to have a condo as a life goal, so to speak. But right now, people are seem to be still stuck in the middle of this pandemic, wishing to go further down, further south or north for a more bigger space in the horizontal development. But in the long term, yes, prime commercial land in Metro Manila for residential condo is still a good bet.
Additional question for you, Paul, from Julius Solis. Pasig River Expressway project will commence next year. Would it be best to buy properties near this expressway, taking advantage of low interest rate offered by commercial banks?
Properties along that, I think the more important thing is what to look out for is where the exits will be. That's where the development and the access is. So it's a big stretch of road, and I don't really know how it will look over the Pasig River. So, but this infrastructure project will really improve traffic times, I think, especially for private vehicles, and any improvement in traffic and infrastructure will definitely improve the values in those areas.
Thanks, Paul. And of course, all the REIT questions to you, Richard, from P till D. Have there been any developments in REITs that affect the different real estate sectors, Richard? And
well, the REIT has been successful now. Like how much money has REIT gotten from the market? But 65 billion pesos. That's a lot of capital that has been sourced from the market. And I think most of the REITs that have been listed have withheld their values. A REIT, of course, is from the IPO to its level right now has probably gone up the most. But the most recent ones have held up. So it's still pretty good. So there are still some big developers out there who are still not in the REIT. So let's see if in the next 12 months the other big developers are going to jump into the REIT bandwagon.
Thanks, Rich. So thank you everyone for sending your questions. We had very engaging open forum. I'd like to thank our speakers again and panelists from Colliers, Joey Roy Bondoc, Dom Fredrick Andaya, Tim Teodoro, Paul Chua, Paul Vincent Ramirez, and Richard Raymundo for shedding light on the current landscape of the real estate sector and providing us with useful insights and recommendations as we gradually move closer to 2022. We would like to once again thank our event partners, the British Chamber of Commerce Philippines, the Australian-New Zealand Chamber of Commerce Philippines, ULI Philippines, the Wallace Business Forum, Canadian Chamber of Commerce of the Philippines, the ABS-CBN News Channel, and the Philippine Daily Inquirer through Inquirer Property. And to officially close our program, let's hear some final remarks from our Managing Director, Mr. Richard Raymundo.
So it has been 18 months since the beginning of the pandemic in the Philippines, and the property market has been through a roller coaster of a ride. From demand in the office segment drying up, from POGO operations and the residential market having to pivot to online sales and promotions. Retail has had to contend with the drop in demand due to lockdowns, and hotels have but dried up as 90% of tourism has disappeared. The good news is we are seeing big improvement in mobility, and that Metro Manila, which is the biggest economic demand generator in the Philippines, has reached more than 70% of its vaccination target. As we head towards the fourth quarter, we are more than really optimistic that we will see more activity in our industry, as seen in more office transactions, residential demand, and holiday retail spending. Thank you for joining us, and please reach out to us for any of your requirements and assistance. We would be happy to assist. Again, stay safe, stay healthy, and thank you.
Thank you, Richard. Again, thank you to everyone who joined our webinar today. You're welcome to reach out to our team if you have further questions or if you would like more information. If you'd like to stay updated on our latest news and insights in the Philippine real estate sector, please follow and subscribe to our online channels. We have our website, colliers.com, and we're present in several social media platforms. And if you'd like to hear more from Joey, he has a regular column in the Philippine Daily Inquirer called Colliers Review. It comes out every Saturday in the newspaper's property section. So make sure you grab a copy of The Inquirer, stay tuned online at inquirer.net, or download the Inquirer app. Once again, on behalf of Colliers, thank you for being with us today. Stay safe, stay healthy, and we look forward to see you again in our next quarterly market briefing. Goodbye, everyone. Fantastic fourth quarter as things gradually continue to get better.